Warren Buffett, one of the world's most respected investors, has once again made headlines with his thoughts on crypto. Bitcoin, Ethereum, and other cryptocurrencies are facing another wave of volatility. But what exactly did Buffett say, and should crypto investors be worried? In this video, we'll break down Buffett's warning, analyze the crypto market, and explore what this could mean for your investments. Make sure to watch till the end, because we'll also reveal a surprising opportunity many are missing right now. Over the years, Buffett has consistently expressed skepticism about cryptocurrencies. Unlike traditional stocks or assets, crypto doesn't generate revenue or have intrinsic value in his view. Yet, the crypto market continues to grow exponentially, attracting millions of new investors every year. This contradiction has sparked intense debate between traditional investors and crypto enthusiasts. Today, we're going to take a closer look at what Buffett really means when he issues a warning. Is he simply being cautious, or does he foresee a larger market collapse? We'll break down the details, consider historical trends, and look at expert opinions to give you a comprehensive understanding of the current situation. By the end of this video, you'll know not only what Buffett said, but also how it could impact your crypto holdings, what opportunities may exist in the market right now, and how smart investors are positioning themselves. So let's dive in and explore the full story behind Buffett's warning and Bitcoin's future. Who is Warren Buffett, and why his opinion matters? Before we dive into the details, let's quickly understand why Warren Buffett's opinions matter. As the CEO of Berkshire Hathaway, Buffett has been one of the most successful investors of all time. His value investing approach has made him billions of dollars, and he is considered one of the most influential figures in finance. When Buffett speaks, markets listen. Buffett's strategies have stood the test of time, even during global financial crises. His careful, methodical approach to investing has made him a trusted voice for conservative investors around the world. Because of this, any comment he makes about emerging markets or new investment types like crypto tends to grab headlines and influence public sentiment. However, it's important to remember that Buffett primarily invests in tangible assets, companies, and businesses that produce measurable profits. Crypto is a completely different asset class. That's why his skepticism is not entirely surprising, but it remains extremely influential in shaping discussions around risk and market stability. Understanding Buffett's perspective helps us evaluate why some investors react strongly to his warnings. By combining his insights with current market data, historical trends, and crypto-specific analysis, we can develop a more balanced view. This ensures that both short-term traders and long-term investors can make more informed decisions. Buffett's latest warning about crypto. Recently, Buffett once again made headlines by stating that he still considers cryptocurrencies to be risky, speculative assets. He even compared them to rat poison squared, emphasizing his belief that these digital currencies lack intrinsic value. This statement immediately sparked debates and market reactions, causing temporary dips in Bitcoin and altcoins. Buffett's comments highlight a key issue. While cryptocurrencies are gaining mainstream adoption, their volatility and speculative nature make them risky in the eyes of traditional investors. He cautions that people should only invest money they are willing to lose, which is a stark contrast to the excitement and hype often seen in the crypto community. Despite the negative tone, Buffett's warnings are not necessarily a prediction of doom. Instead, they reflect his investment philosophy, which prioritizes tangible value and proven financial metrics. This helps investors differentiate between hype-driven speculation and assets with long-term fundamentals. Buffett's warning also serves as a reminder to assess your own risk tolerance. Whether you are a seasoned trader or a new investor, understanding the market's volatility is crucial. By analyzing the context and historical behavior of Bitcoin and other cryptocurrencies, we can make smarter, more calculated investment decisions even in a highly speculative environment. Impact on Bitcoin and other cryptos. Now, let's talk numbers. Bitcoin has been hovering around $90,000, showing both resilience and volatility. Historically, Buffett's statements have influenced investor sentiment, especially among conservative investors who may reconsider their positions. Price swings following his comments are common, though their long-term impact may be more limited. Other cryptocurrencies, such as Ethereum, Solana, and emerging altcoins, also experience temporary volatility after such warnings. However, younger and more tech-savvy investors often prioritize adoption, use cases, and blockchain technology over traditional investment metrics. This creates a disconnect between traditional finance voices and the crypto community. The market's reaction shows that while Buffett can move sentiment, crypto has its own momentum. Social media, exchange activity, and decentralized finance projects all contribute to resilience in prices. Short-term dips might be alarming, but they can also present buying opportunities for those who understand the market dynamics. Investors should pay attention not only to Buffett's warnings, but also to macroeconomic trends, regulatory updates, and technological developments. Combining these factors allows for a more balanced approach to crypto investing, blending caution with potential upside. In essence, Buffett's warnings are a tool, not a rule. Why some investors disagree with Buffett? Many crypto analysts and influencers argue that Buffett doesn't fully understand the technology behind blockchain and digital currencies. They claim that cryptocurrencies are more than speculative assets. They are building blocks for a decentralized financial system that can challenge traditional banking and investment models. These investors highlight Bitcoin's fixed supply, decentralized network, and increasing adoption across industries as proof of its value. Unlike traditional investments, crypto combines technology, finance, and innovation, creating opportunities that conventional metrics might not capture. This is why some investors see Buffett's caution as conservative but not decisive. Furthermore, the rise of DeFi, NFTs, and blockchain-based applications has created entirely new financial ecosystems. Crypto supporters argue that Buffett's traditional frameworks simply don't account for these innovations. Therefore, while his warnings are worth noting, they may not fully reflect the evolving landscape of digital finance. Ultimately, the disagreement is less about price and more about perspective. Those who understand both crypto technology and market psychology believe there are still long-term opportunities, even if the path is volatile. Investors must decide whether to follow Buffett's cautionary stance or adopt a more speculative, growth-oriented approach. Opportunities in the current market. So, if you're holding crypto right now, what should you do? For long-term investors, market dips can actually be opportunities to acquire coins at lower prices. By analyzing trends, diversifying holdings, and understanding risk tolerance, investors can position themselves strategically for potential gains. Experts suggest focusing on a mix of established coins like Bitcoin and Ethereum, while exploring promising altcoins that show real adoption and technological potential. Staking, yield farming, and participation in reputable DeFi projects are additional strategies to grow your portfolio without taking unnecessary risks. It's also important to stay informed about regulatory developments, security measures, and market sentiment. Cryptocurrency is highly sensitive to news, and informed investors who act based on data rather than hype often outperform those who react emotionally. Buffett's warning is a reminder to remain disciplined and cautious. Finally, remember that investing is a marathon, not a sprint. While short-term market fluctuations can be stressful, maintaining a strategic, informed approach allows investors to take advantage of volatility rather than fear it. With careful planning, education, and awareness, the crypto market can still offer significant opportunities for those willing to navigate it wisely. Warren Buffett's warning should be taken seriously, but it doesn't necessarily mean the end for Bitcoin or crypto. Understanding the market, knowing your risk tolerance, and making informed decisions is the key. Use this insight to guide your strategy rather than dictate it. If you want to stay updated on crypto news, trends, and expert insights, make sure to hit the subscribe button and turn on notifications. Also, comment below. Do you think Buffett is right, or is crypto here to stay despite his warning? We'd love to hear your thoughts and experiences with crypto investing. Remember, the crypto market is unpredictable, but informed decisions, patience, and awareness can help you navigate volatility and identify real opportunities. Thank you for watching, and stay smart with your investments.